from the previous videos, we have staging of MTD for VAT taking place in April 2019. That applies only to VAT registered traders with a turnover in excess of the compulsory registration limit of 85,000. But just to clarify, exempt supplies, or for example single farm payments, are not taxable supplies for VAT purposes and therefore should not be taken into account for MTD registration purposes. The staging for unincorporated traders and landlords is likely to be next, but the government have assured us that this will not take place before 2020. As for corporation tax, the decision for the staging date has been postponed, so at present we have no concrete indication of when this may be. So perhaps you'd say nothing much to report on future implementation, but what impact will it have on you if the VAT registration limit is lowered? The Chancellor of the Exchequer considered this very seriously at his last budget. His reason for doing so is the worry that a high registration limit for VAT is placing an unnatural cap on trade. A business trading with a turnover just below the registration limit may restrict its trade in such a way that they purposely remain below the registration limit. Rumour has it that he was considering lowering the limit to 30,000. He was persuaded not to adopt this, but there is now a consultation period to examine this in more detail. Our prediction is that the VAT limit will be reduced in due course and that the end point will be brought in line with the MTD income tax limit, which was proposed at £10,000 per annum. We would expect this to be reduced in stages so that the end limit coincides with staging for income tax, maybe by 2021. So, whilst we're only talking of traders with a taxable turnover of 85,000 or more at the moment, traders with a smaller level of turnover should be ready to be brought within the MTD net during the course of the next 2 or 3 years.